They say this is a big rich town. I just come from the poorest part. Bright light, city life.
This is why people stay rich broke.
So I have a corporate career, right? And I do basically portfolio management, and I manage over $10 million. Okay, and one of the things I have found is that a lot of people don't know the difference between profit. Well, just step back. Revenue, profit, and income.
Pretty and successful. It's kind of attractive, actually.
Revenue, profit, and income. And then more importantly, a lot of people don't know the difference between hard assets and liquidity. Okay? But revenue is the top line of all
That's one thing I've noticed. A lot of people say they want to be entrepreneurs, but they do not know the difference between these three. And she's about to explain it.
all that you have generated from your sales. So if I'm putting out a product, and this product is $12, and I sell 100. Okay? The total dollars that comes from the sale of this product is my revenue. My profit is my revenue subtract my expenses. Revenue subtract my expenses. That is called your profit. Okay? And then income is your revenue, subtract your expenses, subtract your taxes, and indirect cost. And that is your income. So, someone may say to you, oh, let me teach you how to build a business that makes $1 million a year. What does that mean? Ask that person, what does that mean? And makes $1 million in revenue, profit, or income? That generates revenue, profit, or income. Ask them. 9 times out of 10, they mean revenue. That's what they mean. And that doesn't tell you if a business is profitable. Okay? And I think a lot of people, a lot of women on the internet manipulate other women on the internet to get them to buy their course or e-learning course because they understand that a lot of women don't understand business. And when we talk about financial literacy, it's not about balancing your checkbook.
And this doesn't go for just women. This goes for everybody. There are a lot of people online trying to sell things, and they bet on the fact that you don't understand finance, but you're desperate and you want to make money. You want to get out the rat race. You're tired of your 9 to 5. So they're going to sell you a dream, make it sound good, and say, hey, you can make, like she said, $1 million. But they don't tell you in the beginning, you may not make any money for 3, 6, 9, 12 months. They don't tell you that once you start making money, you're not really going to make a profit for like 3, 6, 9, 12 months. And then they don't tell you, even after you start making a profit, that you're not going to have an income for yourself. But they just make it sound good. They say, hey, you can make $1 million. You can make $1 million if you want to make quick money fast. Come buy my course. I have all the secrets. I always ask myself, if you were the guru, and you're making all this money, right? And you had, all the ins and outs. Why would you sell what I would think are secrets? Why would you give that to people so that now they would put themselves in your industry and become your competition? That never made sense to me. And maybe I'm a little selfish, but to me, if I'm making a lot of money and it might be a niche industry or any industry for that matter, but if I'm making a lot of money, why would I want to invite more people who will become my competition, who might figure things out a little better than me and then price me out the market? I never understood that. I personally think it's because they don't really know. They're just selling the idea that they know. They're selling you a dream. They're telling you that they actually know so they could make money off selling you what they know, which in a lot of cases, you can really just Google all these things yourself. You don't really need to pay somebody or pay a guru to receive all this information. And the thing about that is there are a lot of grifters out there. People who are just selling dreams, try to sell you everything, even though the backdrop is in a jet or a Phantom, a nice luxury car. If you're making all this money, why do you care to go out your way and try to sell people these things? If you're making all this money, you don't need to sell all these things to people. You don't. If anything, if you're that generous, you're just going to give it to people because you're in a jet. You're in a fandom. Why do you need to do all that? Right? Never made sense to me. I would think if you're making all this money, you're going out your way to either try to make more money with the idea that you have and not invite more people into your industry or market where they will become your competition. And I would think you would just be out there enjoying your life. I'm not saying I'm selfish, but it just never made sense. I'm just saying.
Balancing your checkbook to make sure that you got enough money in your bank account to pay your bills. No. Financial literacy is about understanding the difference between, not only, but a part of it is business and finance, right? Understanding the difference between profit, revenue, income. And then even more so thinking about hard assets, right? There's one thing to own a house, right? And there be some equity in the home. And there's another thing to have liquidity.
Yeah, a lot of people don't understand those basic facts, but they call themselves entrepreneurs. Let me try to explain to all of my buy-ins, my young men, men in the street, people who just don't know any better, but they tend to enjoy shows about El Chapos, the cartels, power. Let me put it like this, right? Let's say you want to get in the game and you want to go get some coke and sell it. You found out there's a connect somewhere in Mexico, Colombia. Pick one. You fly out there. You land. You contact the connect, El Chapo or the cartel. And you say, hey, I'm here. I want to meet. I'm trying to buy some things off of you. They say, okay, wait. It might tell you wait 3 days, 5 days, maybe a month. Because if you're dealing with the cartel, for example, they're going to try to see what type of person you are, how you move, what are you doing. So they're probably going to take that time to observe you, right? Investigate you, stalk you a little bit. Get some information on you, see how you move, what type of person you are. Finally, say, hey, let's meet up. El Chapo says he wants to meet up with you. He wants to talk to you, see what you're about. You finally go. You meet up with him. You convince him. You say, hey, I can do this. This is where I could distribute it at. This is how much money I could bring in. This is how much I could give you. He says, okay, fine. You convince him. Gives it to you. Now you got to find a way to move it across nations, right? You got to move it from Colombia or Mexico to wherever you're based. It could be America, Europe, Africa. Take a pick. You're actually good at it. You figure it out. You move the product to where you need to move it. You get home, you break it down, you bag it up, you tell different blocks, different people, different distributors, say, hey, I got the best Coke, try it out. Let me give you a free sample, let me know what you think. Give it to people, boom. That right there is your expense. You haven't even really gotten to getting money back, which is your revenue. All right, everything starts going good. You start making money. Let's say on the bad side, you don't make a lot of money. If your revenue isn't more than what you spent to even get the product, which is the Coke, into where you do business at, you're going to be at the negative. So you have negative profit. Let's say everything works out. You make a lot of money, right? You make more money than what you spent. That revenue minus expense, that's your profit right there. But it's not done though, right? Revenue minus your expense, you made a profit, but you still have to pay back El Chapo. So part of that profit has to go back to El Chapo. Now you pay him off, you got some money left. Now you got to pay your soldiers or the people who move the money, the people who got the money to wherever it needs to get. You got to take them out, make them feel happy, make them feel like they won. Mind you, prior to all this, you had to pay to market it. That's part of the expense. Now you have money, but you can't just now take the money and go ball out. You got to keep that money because you got to go back to El Chapo and say, hey, I want some more. Yeah, I gave you the money that I said I was going to give you for what you fronted me, but now I need some more. And I'm going to pay you up front now because I made money. Now, after all of that, all the money that you take in and now you can pay your rent or buy a house, eat, whatever the case may be, that is your income. And that is what she's talking about. Now, let's say you're not in the drug game. You're just a regular person. Let's say you're trying to sell some clothes. It's the same idea. You have to go get the clothes, get a designer, get her made, get the proper material. You got to market it. That's your expense. Now, once you start selling the pieces, your finalized pieces that you were able to give, or I should say sell to people, and you're making money off of it, that becomes your profit. But even then, you just can't take the money and say, oh, I made some money. You have to think about what you're going to do moving forward. You have to still invest in the business. You have to keep marketing. You probably got to pay for the space where you got to store it. You got to pay for the place where you're selling it at, whether it's online or in a physical place. So that money is still not even coming to you. You got to pay the people who are helping you make the clothes, distribute the clothes, store the clothes. That money comes out of your profit. Now, the money that you are finally able to keep for yourself is your income. And that is basically what she's trying to describe. And a lot of people who call themselves entrepreneurs do not understand that concept. They think, I made money, I'm rich. They don't think about the future. They don't think about what they owe, who they owe. And a lot of times that's why businesses fail. And that right there is a rich broke mentality.
Have liquidity, right? Being able to tap into the equity in a home. And that's usually through a loan called a home equity line of credit and all the other things. But even if we're just thinking about hard assets versus liquidity, right? Some people might be worth $2 million, $3 million, $4 or $5 million because they have properties. They got cars, and cars depreciate, so it's really whatever. But they might have properties all around town, all around the city, all the things. That does not mean they got $5 million of liquidity. They could have probably 10K in their name.
That is very true. And a perfect example of that is Elon Musk. Yes, on paper, he's the richest person in the world. I forget, but I think I heard somewhere in the $300 billion. Whatever. Ridiculous. I don't know why someone would need that much money. Even though he is the richest person in the world, he does not have the liquidity as people think. What he does to pay for his life, his kids, his family, his various houses, he borrows against his assets. Most of his assets are in stocks, Tesla stocks, and his various companies, Boeing, etc., which actually is smart because you don't want to sell your stocks, because once you sell it, you're taxed on it and it stops growing because you don't own it anymore. You sold it. So what he does is he borrows against those stocks because he knows, one, his stocks are going to grow faster than the interest rate on the loan. So he sits on those loans and he lives off those loans because those loans are backed by his stocks. As long as he owns it, that loan is still valid. So he sits on it, he lives off of it. And what he's going to do at the end, which I'm pretty sure he already has set up, probably has a trust set up where if something happens to him, the trust is going to absorb the money from his assets, sell some stocks, and then pay off all his loans. And then whatever instructions he has on that trust is going to happen. But that's basically it. So that's really the difference between having equity and liquidity. A lot of people have assets, and yes, they're rich on paper, but they don't have liquidity. Liquidity is just having money at your fingertips or in the bank. You can just go, get the money, and do whatever you want with it.
Because they got multiple properties, and they probably cash poor. Because until the 15th come, when they get that income from all their leasers, they ain't got it. They in a hole. And a lot of people don't know ball, and a lot of people don't know money. So I'm just an educator. My goal is to make sure that people are not getting scammed.
She's right. And that was, I think that was a very good explanation. She sounds very knowledgeable. That's what she's talking about. And that's one of the ways people stay rich broke. They don't understand revenue, income, and profit. They don't understand assets and liquidity. Obviously, there's more to it. And it's up to the person to educate themselves. But if you don't educate yourself, you're going to stay rich broke. Peace.
Hey, if you enjoyed this clip of Rich Broke by Benny Beckrow, make sure you follow, like, and subscribe.